Happy Sunday, friends. I hope you guys had a nice weekend and that you had a very successful week in the markets. I will wait for Instagram to tap us in and we can then get going. We have a very busy trading week ahead of us. We have a lot of earnings coming out, and of course we have a full week of macro data. So I'm sure for those who weren't already positioned for the massive bull run that we have continued to have, running up to all-time highs, you may feel that you were a little bit left behind in the activity in recent weeks. Now, I don't know, Instagram hasn't given me the signal. I can see that people are coming in, but don't exactly have the signal, so I may have to close and then come back in. All right, so let's just get going. I see y'all coming in. So let me know where you guys are tapping in from. And if you know that somebody normally comes to the lives, you can always share this with them or at them so that they know that we are here and ready to go. So I think that the biggest question that everybody has on their mind is, are we going to continue to run to further all-time highs? Will we continue to make new highs going into the week or going into the next weeks, and how that's, what that looks like and how can we position for it? The reality is that we are overextended here. Now, when you look month over month, a reality is that a massive amount of the move that we've had on the indexes was giving back the fears of Liberation Day, which turned out not to be what everyone was terrified about. So at the end of the day, the key thing is that can we continue to see markets move up? Well, we know that Trump is focused on continuing to have a weaker dollar. So not necessarily like aggressive weakness, but that the dollar doesn't start to strengthen against other currencies. And that will continue to encourage foreign investors into our own markets. And then, of course, you have just the really high returns currently on treasuries. But in spite of that, people are really not interested in buying treasuries. We're not really selling long-term treasuries. So the 10, 20, and 30 year, first of all, the Secretary of Essent isn't actually auctioning a massive number of long duration bills just because of the fact that we're at crazy levels of interest rates. So, they're pushing out these shorter term bills until they can get a more dovish Fed chair and a more dovish voting Fed, because they need the entire committee to be voting on interest rate cuts. So they need to not just have Bowman and Waller on board. They need to actually have a more substantive piece in the 12 voting members of the of the Federal Reserve, which at the moment they don't have that wider support. They do have some key vocal supporters from different voting Fed members, but they don't actually have a majority who are dovish and are looking to cut massively. So, we have a lot going on that's continuing to push money into the markets. The other thing is that as long as people are seeing their 401ks and their Roth accounts and their other pension or retirement funds that they may have through their unions or other investment vehicles, they should be seeing those accounts running up to all-time highs. And if that's what they're seeing, then from their general income, they may be willing to continue spending or even continuing to pour into markets. So is our economy going to fall apart? That's not really likely unless we see some major changes in the labor market. Now, in the coming week, we are going to have unemployment claims. So jobless claims will come in, and also non-farm payroll data will come in twice this coming week. And those data points are extremely important, just because of the fact that at the current moment, the ongoing conversation is how strong is the labor market and where is inflation going? And the fact that there's still some kind of like ambiguous areas to both of those questions, has made it really difficult for people to, for the Fed to be able to have like an aggressive response to how they're going to do rate cuts. Now, with this whole week, this weird conversation between Trump and Powell, where it's just very obvious that Trump is trying to bully him to do what he wants, which is essentially to do a rate cut in July, or in like to signal that he's going to be doing more rate cuts this year than what is baked into the summary of economic projections. But the fact that Powell now is under pressure that if he does any kind of rate cut, it is not going to appear that he's doing a rate cut because of what's happening in the economy, but that he's doing a rate cut because he's basically being told by Trump that even if he doesn't exit the scene, that Trump is essentially going to make him a lame duck Fed chair. So you have that kind of going on in the background. Now, the reality is that for Fed Chair Powell, the labor market is still doing well. The key sector where the labor market is not doing well is with new grads. And the reality is that you have a lot of companies who are afraid to let go of people who have a long time amount of wisdom and knowledge in a company and know about their IP and understand how the company work. And of course, the kind of positive employee kind of camaraderie that's baked into a company when you have the same employees over and over, over a longer period of time. The reality is that, what's the word that I'm looking for? The reality is that, new companies that are looking for new hires, a lot of them are trying to find new ways to utilize AI to be able to kind of reduce their overall spending, and then to be able to increase their utilization of their AI spend. Because a lot of companies are spending a lot of money on, just 1 second. So a lot of companies are trying to focus on really getting that like a return on their investment from their AI spend and from that CapEx. And the main way that they can do that is by aiming not to be continuing to hire new hires and training people from zero, but really trying to see where exactly AI falls short and where they need human intervention in kind of the employment process. So of course, that is very difficult for that segment of society, kind of those young graduates who are looking for jobs. And eventually there is going to be a problem in the labor market because you will have boomers who are continuing to retire, who are continuing to move out of the markets. And then the question is, are kind of new graduates going to have any experience? And that's really a massive problem when you are trying to find a job and you're a young person, is the question, do you have experience doing A, B, C, D? There are really only so many months and years where new grads can just do internships, especially if they don't necessarily have families that can help them, help make ends meet and help them pay back their student loans. That's going to be a massive problem. The thing is that I don't think that kind of crash and kind of generational needs is going to kind of become such an apparent problem in the next 2 or 3 months. So the labor market will continue to do quite well overall, and income will continue to do quite well overall. And because of that, Fed Chair Powell's gonna have to respond to that reality that the labor market is doing quite okay. And unemployment, though it is slow ticking up a bit, it's not ticking up in a way that should make anybody have some kind of knee-jerk reaction. So there's that. Then, of course, there's the other aspect of inflation. Now, the thing is that obviously inflation has been continuing to contract based on all the lagging data. And the reality is that the market has been baking into the process kind of a 10% baseline for tariffs. But now we're starting to see that even with some of our most friendly compatriots in the economy, that we're starting to pass on to them 15% tariffs. Now, there are a lot of loopholes to all of these tariffs. So if the actual rate is going to be 15%, that's something that I can't guess about. But what I can say is that that's not what the market was expecting. Now, of course, we had that weird backlash where on Liberation Day, we had the weird cardboard where we had a lot of random numbers that no one really, that no one really had any response to, but and ended up being just kind of like a big nothing burger. But the reality is that behind the scene, there was the idea that we would have 10% tariffs, and now we're going towards 15%. And it looks like conversations with Canada are not going well. Over the weekend, of course, we had quote unquote positive news about the European Union. But again, that was supposed to be 10%. Now we're seeing 15%. So there's still some issues about how tariffs are going to roll out that continue to make it difficult for the Fed to say, yes, we've kind of hit our mark. We believe that we've arrived on inflation, and that by cutting rates, we're not going to cause a reinflation. But of course, Trump doesn't want that. Trump has obviously come out with his amazing, big, beautiful, sexy bill. And this bill has just created a massive amount of debt that they need to roll out. And they cannot be rolling out, they can't finance that much debt with 3-month and 6-month T-bills. And the reality is that, right now, Bessent has a kind of a PR issue because the entire lead up into his nomination and then coming on as the Treasury Secretary, or the Secretary of Treasury, he, was basically degrading Yellen's work quite aggressively, and the fact that she kind of was leaning into these short-term bills so much. Now, oddly, he realized that there wasn't really anything else you could do when rates are this high, and he's essentially done exactly what she did. And not only that, he can't roll out any other kind of plan because there's really no significant rate cuts coming until after Fed Chair Powell rolls out. Now, that begs the question that I've had in my Discord and with many people: do I think that Trump is going to fire Fed Chair Powell? Well, the reality is that they tested the market. They put out this weird fake news to see what markets would do, and markets were pissed off. So Trump realizes it's exceedingly unpopular from outside his base for sure, but even within his base, for him to threaten the independence of the Federal Reserve. Now, he has kind of gummed the dog because it's quite clear who he is likely to recommend as the next Fed chair, which is likely to be Waller. And Waller has continued to be extremely vocal about his dovishness and the fact that he thinks that we need to have more rate cuts faster than what the summary of economic projections is allowing for. So in the reality, as we go forward, we know that there could be ongoing turbulence in the conversation, but until now, we know that Trump isn't going to do anything excessive because it was already quite clear that markets just don't want any turmoil. They don't want any instability. They want to know what's going to happen next. So because of that, I think that this coming FOMC, there's a lot of volatility baked into Wednesday's conversation. Also because PCE will be coming out, and so there is other economic data that's going to potentially, bother markets. The truth of the matter is that volatility is likely to be really high, and Jay Powell's going to come out and he's going to know how to talk to the markets. He's going to explain, he's going to be dovish, but likely say that they're not ready to cut rates because they still don't know what's going to happen with inflation. So I think that we're going to see volatility just on that Wednesday kind of pitch up, which is kind of nice for those who are selling volatility. That will give you an opportunity to do things like roll out any kind of short positions, because you know that on that date, you're going to have this really high volatility, and the other dates that the volatility is going to come down, because we will know then what Fed Chair Powell is going to do, and if he is going to kind of toe the line and do an unexpected rate cut, or if he's going to stick to the script. All right. So I think that the other major thing that we have to consider in the coming week is, how do we play the ongoing just being at all-time highs? And the reality is that at these all-time highs, you have to find a way to position yourself with both long and short positions. This week in the Discord, we talked a lot about ratio spreads, using both long and short positions to hedge yourself so you can take advantage of the ongoing gamma that is squeezing us to the upside. But then in the event that some kind of news comes out that gives us that fast push down, you don't kind of like lose your shorts, or you're not naked when the water goes out. But if you don't know how to trade those kinds of positions like calendar spreads or diagonal spreads, then I do encourage you to learn. You don't have to learn with me. There are educational tools on YouTube, and you can go and check any of those out. I know that Thinkorswim has a lot of educational material, as does Tasty Trades. If you don't want to trade with us, or you want to learn on your own, that's absolutely your prerogative. But I think that here we are kind of getting to a space where we can at least see a natural pullback. And at the movement we've had, a natural pullback could be up to 5%. And that would be a lot if you don't know how to hedge your portfolio. The other thing that you probably want to start considering learning is how to trade VIX and how to trade volatility that is higher on different expiration dates for underlyings you like to trade the most. So if you like to trade Google consistently, you want to know what the natural kind of path of volatility looks like for Google, and then figure out when volatility is extremely high, how you might start to sell around those shares in order to avoid having some massive drawback. So I think that, that's something that we talk about often. And we talk about in the group often, that, you want to be deploying strategies where you're still able to participate in the upside, but without just, kind of like bungee jumping without having checked your ropes. And as Millennial Property said, covered calls are great as well. And that's exactly it. Like if you're long the shares and you're adding a short call, then that's perfect. Or, selling calls on TQQQ, whatever it may be, you want to consider a lot of people miss the bottom of this kind of fall because the whole time they were expecting there could be another leg down. And I'm not saying that I wasn't expecting another leg down, but one of the things that saved me is that I had been playing short puts even on the way down. And the reason is because a lot of times those exceedingly advantageous prices only show up once or twice. And when you've had a 20% drop on really key stocks, you don't want to be hoping that a base kind of forms, because sometimes you don't get a really long base in price. Sometimes you just get a pop down and then a quick tap back into that 50% of that downside demand zone. And then that's it. You're off to the races. And as you saw, we often get these very fast V-shaped recoveries. And in part, that's because it's very difficult for bad news to keep shocking. And it's difficult for bad news to stay as bad as it was when you first found out about it, because we have a lot of resources to deal with problems. And once we know there's a hurricane and this is what FEMA is going to do, it kind of gums the dog. Yes, the tragedy still is there looming, but we are not wondering like, is there going to be any solution to any of the problems? So by constantly thinking, oh, we've had a massive push down, so we will get another push down, that's often very difficult, especially in the way that we have like the legal regulations surrounding the markets. And I feel like I mentioned that a lot, so I don't want to talk about it too much. But, I talked about this, I think, on the call that we had with Zay recently. And basically, it's the fact that now everybody who works has to contribute to a 401k, and you are contributing to Medicare and Medicaid. So the reality is, unless you choose not to participate, so everybody is legally enrolled in whatever pension program their employer has, unless they choose not to participate. And because of that, a massive amount of employer matching plus employer payments to their retirement funds causes a lot of monthly positive flows. And some of those flows are bi-monthly and some of them are monthly. But altogether, that amount of just consistent buying makes it really difficult to have many legs down. And there were definitely, a time where, my dad was asking, do you think that this is the bottom? And I was like, I'm kind of holding my nose here. Like, this is 20%. It's a massive drop. I just can't justify not getting long exposure. And for people who are in the Discord, they saw me. I was getting calls at the 6,400, 6,450, 6,350, even up to the 6,600 on the S&P. And I'm now like in the money on those calls, which seemed really ridiculous, not even 2 months ago. But, if you want to get 2-year leaps on SPX, I mean, that's like $30,000 a call. But, when you're down 20% and all of the volatility is pushing to the downside, those calls got down to like $3,000 or $4,000, which is still a lot of money. Obviously, it's not like, 10 cents. We did them with diagonal spreads, so we were able to get them for, $1,000 or something. But, if I told you there's something that is worth $30,000 that you can buy only today for $1,000 because there's just a terrible market situation, you feel really strange not to do it. Over the weekend, we were looking at those positions and they're up like massively. And some of them I didn't even manage them because they were just so green. I didn't even realize some of my shorts were already like not in the money, but already starting to get close to the money, and I need to manage them this coming week. It's a nice problem to have when you're so green, you don't feel obligated to like manage your trades, but that's not really responsible either. But the reality is that, when you've had this massive drop, you want to participate without being absolutely stressed out that you're going to like give back, that you're going to see another 10% down. But at 20%, you just have to start participating. But now we've taken back all of those losses. Now we're back at all-time highs. We're pushing all-time highs. The gamma is still above us. And even on our Saturday class this weekend, a gentleman asked, it seems that you're still really long. And I was like, until gamma starts truly repositioning to the downside, the market can remain irrational longer than I can remain solvent. I am not wealthy enough to put in market highs or to force markets to do a reversal. So, I have to be really careful not to bias my ideas because I think something is overextended. Because if you go back and even look at something like an RSI, you can see that things can grind on that overbought or oversold level for a really long time. And you don't want to be caught in a situation where you are short and markets are still going up. You just bake in unnecessary losses. So this week, I think that we have a lot of volatility coming. And but the volatility is specifically positioned for the Wednesday. Monday, we can see another leg up in the markets because Monday we don't have a lot of, too much news chatter. Most of that's going to be on the Tuesday, Wednesday, Thursday, and Friday, but significantly on the Wednesday, based on what happens at FOMC. Now, normally with FOMC, it's basically a lot of volatility going into the markets. And then once the presser starts, between the presser and when the questions come out, usually markets start to kind of give back whatever their kind of trajectory had been. So if they were really bullish because everything did what it was supposed to do, then usually once Jay Powell starts talking, then you start giving back that move. So it's not a sustained volatility. Now, of course, if Jay Powell comes out and like freaks everybody out and he resigns and this and that, well, then, seeing a 10% like down would be not bizarre. That would be quite reasonable because that would just be a lot of instability. But I'm sure that Trump has made it very clear to Powell that he's doing a lot of public conversation, but he's obviously not going to fire him and does not want him to resign. He just wants him to do rate cuts. And you could see that in the awkward discourse between them this week that, that Trump is trying to embarrass him, but he doesn't want him to leave because Trump already saw what the markets are going to do or how the markets are going to feel if Powell is fired. So I'm not sure if you guys have any questions, if there are specific stocks you're looking at. Obviously, this week we have a lot of earnings news, but I'll be honest, I don't have, there's no earnings position where I'm like, there are just a couple of trades that we put on where I was like, okay, we've already been playing them long, so let's just kind of protect our position, but we didn't exit the trades. And then a few that had really nice positioning for August OPEX. So a lot of the institutional positioning isn't actually even for this earnings week, which is rare because normally we have a massive amount of gamma kind of built in to the earnings week for the different underlyings, and we can kind of play a lot of squeezes. But this week it's actually the positioning is not really exceedingly interesting. I think people who are in swing trades will continue to stay in those positions. I think like a great example is something like a SoFi, and that was something that we did talk a lot about on the lives, but also in our Discord, we've been in that sense. I mean, the trash can, it feels like, but, we were then adding when we started to see that at like the $12 mark, it was really starting to get a lot of positive flows, a lot of positive gamma. And now it's all the way up at the 21, 22 mark. So, those kinds of stocks, if you're, institutions are going to have major positions because their major positions were months ago. So, I think that for many people, let me just see, I noticed that, let's see if we can get Uncle. So institutions have been positioning themselves very specifically from months back, looking into this quarter and trying not to position themselves directly into that earnings season. But so this, even last week, usually during earnings, I have 4 or 5 plays that I'm like I have a super high conviction about. But this the last couple of weeks, the gamma positioning hasn't been clear enough for us to like layer on many new trades specifically for earnings. But again, like I said, the clarity is where is the positioning for August OPEX? And for most underlyings, we're kind of at that ceiling, or we have a little bit more of a push up. And then we need to see that gamma starting to roll further up the chain. If we don't, then we're not going to continue to get those squeezes and those pulls because we're just not getting the broker buying behind us. So, Yeah, I'm not sure if there's any stocks that you guys are specifically looking at, or if there's stocks you have any questions about. I'm happy to, talk about those. But other than that, I think that the main issue is the economic data that's coming out this week, and just how bonds are going to respond to Jay Powell's presser. So Tesla is, kind of is it had some gamma to the upside, but it also had a lot of gamma to the downside going into earnings. We did try to, we had like a really kind of very, very low risk calendar to the upside. Obviously, that um, didn't transpire for us. And so but we could manage it. And so we kind of got out flat on the trade, which was fine. But Tesla has a lot going on, not just at the company, but obviously politically. There's a lot going on with Elon. There's a lot going on between Elon and Trump. And so I think that, it's just a stock at this point for me where I'm like, if I have to play play a stock based on, like, obviously fundamentals of the company, but also based on clean positioning, Tesla just isn't it anymore. There's a lot of kind of um, the positioning is unclear. So usually Tesla was great for gamma. I think the key benefit you have with Tesla is that they just are really high volatility stock. So if you like doing things like selling puts, or selling put credit spreads or call credit spreads or iron condors, you will end up. Um, oh, can you guys actually see me, or is the video breaking up? Can you guys let me if you can let me know if you guys can actually see the video? Because everybody's saying that it's breaking up. It was blurry, but now I guess maybe hopefully it's okay. Oh, it's breaking up. Sad. This is the second time now that, you know what? The last two times I did this, I used the AirPods. Wonder if maybe that's part of the problem. Okay, next time I'll use my other headphones and see. So, Microsoft, we had a really nice squeeze going to the upside. So we've been playing Microsoft up to the 510, but now we're basically there. So again, it's another thing that I need to see the gamma start to roll up the chain for Microsoft. So PLTR, I don't play PLTR just because of like, my like my personal beliefs. I don't play PLTR, but they've continued to have, building gamma to the upside. I think PLTR is just a company where that a massive amount of defense funding is behind them. They have had a massive amount of support from the president and from those around him, and his cabinet. So and they're just continuing to get new contracts and get new contracts globally. So I think that um, PLTR hasn't seen its high, hasn't even started to see its highs. PLTR has an entire agenda about how they want to utilize individual American kind of data and biometrics and so forth. And they have been given a lot of contracts that will allow them to do that, not just in the United States, but also with Israel. So, I mean, what they'll be able to do with that amount of data and what they'll be able to produce with that is, um, I think that, like, we have not seen we have not seen like what PLTR can do. So I think that it continues to be a company that, you should, if you are in it, I wouldn't, if I was in it, if I was buying stock, I wouldn't be selling my stock. So, could there be time for a cool off? Um, obviously, like Microsoft just was straight up, but you also have to think about the fact that Microsoft was, if you look like on a monthly chart, it was just doing nothing for so long that it's finally kind of getting its heyday. So, um, so I don't know how much of a pullback either of them have to give. Um, but if you're playing like for a long term, then I wouldn't bother myself trying to just be getting in and out, in and out. Um, so is Apple a good swing? So, I mean, this is something Mark talked a lot about last week and the week before. I think Zay and I talked about it. Um, you know, think a lot of people are continue to be very bullish on Apple. There does continue to be a lot of gamma positioning at the 250 and the 260, especially if you look out further down the line. But, I'm a day trader or like a shorter term swing trader. That's like really where I focus my trading because that's where gamma works, right? Gamma doesn't gamma doesn't get pitched until it's like close to expiration on your contracts. So, doing a lot of positioning where I'm focused on things like 6 to 12 months out is that's not where like gamma has its massive win rate, let's say. Um, so are there other stocks that are out there that can move $50? Absolutely. So do I need to play Apple to get a $50 move? And then how long is it going to take Apple to move 50, $60? And can I play two stocks that could move $30 in 1 week? So, I would rather be playing um, underlyings that can give me a really big move and more so by percentage, right? Like a $60 move for Apple is what, like is 30%, 28% of its value. Okay, like can I not find another stock that can move 28% of its underlying value? When you and I think of things like the space stocks, right? Like those space stocks they've barely started running, and just like PLTR, they're getting a massive amount of funding. They're continuing to get contracts. They're companies with like a key fundamental basis, but they're newer companies that are growing. So, can those stocks move 28%? Obviously, look at ASTS, look at ALAB, look at, some of those companies. They've like tripled in value since we've been playing them. So, I have to also be considerate of the fact that Apple is a legacy stock. If you already own Apple and you've owned Apple for a long time, then there's a great way to generate income against the stock you already have. But it is a slower mover. And so, as an options trader, that's not really where I'm going to get my biggest bang for the buck. And if I can hit my ROI each day by playing something else, then I might as well do that and reduce my risk. So yeah. So is it a good swing trade? Probably. But how long you want to be in that swing, I think that it's a kind of company that you just have to buy it and have it in a portfolio you're not looking at, and then let it kind of nail along. Now, Apple does when it gets really positive news and it has a like event coming up, that's when it starts to have volatility. But Apple is a kind of company that isn't volatile, just isn't like a Tesla. So, you have to be careful how you play it. You're buying shares, fine. If you're trying to get like big moves, then you really need to know like what the purpose of that squeeze is. And I personally don't have like a massive, like strong conviction that, oh, Apple is going to do this and then we're going to see a massive squeeze in the next 6 weeks or something. So, Oklo, you know me, I'm in love with Oklo, and I'm in love with um, all of the nuclear stocks, and I've been playing all the nuclear stocks since forever. So, I mean, I think that all of these stocks can continue to run as long as data centers is a word that people are using as consistently as they are. Like, I would just put in like a Google Trends or whatever and see, like, and then, cross check it with a Google chat. are we talking about data centers less now than we were before? Um, I don't think anybody would be saying that. So as long as we're talking about data centers, nuclear is always going to be at the center of that conversation. And since uranium is, there's a lot of legal regulations around how we mine it, where we find it, so on and so forth. I think that, you like, it's going to always be a limited resource, at least for now. Um, but I think that all of like everything nuclear is something I would say don't short run it. It can keep going for a long, long time. It'll be one of those stocks where at the moment you're trading it, it feels like it's like this. And then when you zoom out after like 3, 4, 5 years, it looks like this. So PayPal. Um, so we missed PayPal. Well, I should say we missed PayPal. We were in PayPal for a really long time, and then we were more in Affirm and SoFi. Then it kind of felt like we were doing a lot of the same. So I didn't want to be over leveraged. So I wasn't doing as much with PayPal since our SoFi and Affirm positions were doing extremely well. But how much more these stocks can run without having any kind of pullback? This is where it's starting to get, again, I think that the conversation around like PayPal and Affirm and SoFi and all of these buy now, pay later and like Venmo and um, Block or whatever it's called, all those kinds of conversations. The thing that you have to consider is that they are technologies that are continuing to develop. They're continuing to go into new market areas, but they're not like in a situation where like there's a desperation for what they're doing right this second, kind of like the nuclear situation or a uranium conversation or a copper conversation where there is a very acute need for it now because of its like lack of accessibility. So I think that it makes sense that some of those stocks start to have some pullbacks because I like to trade supply and demand zones. And after you've had, especially on a higher time frame chart, you've started to have like 4, 5 zones on the way up. You should expect some kind of pullback. And I think similar to Netflix, where it looked like we were going to have a bit of a pullback before earnings. We actually ended up getting the pullback after the earnings. So once the volatility kind of unpinned the stock, then it had the capacity to come down. So I think that some of those financial stocks could start to see um, a bit of digestion in their price action because they've just been like this. Now, a firm may end up playing out a bit differently because a firm went up, it created all of its zones. And then after it took out that origin zone up at the top before it's dropped down because of, all the tariff stuff, it has been just moving sideways. So a lot of times stocks can do their accumulation and then avoid a massive distribution because the accumulation at the top of the range has demonstrated that there is an aggressive amount of new selling. But for PayPal's chart doesn't look exactly like a firm. It hasn't had upper side, that upper side consolidation. So in that, I think that, we can expect some kind of pullback. SoFi had a much longer basing. And so I think that just, if you're like looking at the moving averages, it's not that far pulled away from its moving averages. So I don't think that it needs to have a pullback right now. But of course, it is earnings week. So it is very possible for all of them to kind of impact each other and they have a bit of a pullback before they make the next leg up. But if you've been in the stock since the bottom, then of course, you're not under pressure to sell right now because even if it took a 5% pullback, you're still deep in the money. So let's see yeah. So EOSE, massive short squeeze coming. That just has like, yeah. you can expect it to get to the 10. And I think I mentioned that also on a previous live. I think that it can get to the 10. So if you're already in it, congrats to you. If you're not in it, check out the chart and look at the 10 for that squeeze potential. I'm not sure if there's other charts that you guys are looking at, um, but yeah, I think that, like I said, I think that a lot of stocks just have the what's the word? Um, they've run up a lot. It's been a really, really positive move. So Amazon, we've been in Amazon for a really long time. Um, Amazon has so if I don't think at all about what Amazon is doing, I don't think about the news. I'm not going to talk about AWS and then this and then this. Just if I look at the chart as a naked chart, there is a reality that Amazon, when it is pressing up against new highs, it only does the squeeze on the Friday. It needs the gamma to get to those next levels. And then you see kind of an immediate pullback. So with Amazon, you really do want to kind of see, um, you really want to be careful that you're playing it like tranche by tranche, because of the fact now we are at all-time highs, and we're like, it does a grind. So I would be cautious to be doing too much here, except for the oh yeah, I'm in Montenegro. So that's where I live. So I live in Montenegro now. So I'm like on the Balkan coast. So it's 10:45 p.m. for me. Nope, not New York time, not Eastern Standard Time by any stretch of the imagination. So with Amazon, we've already been playing it. We've been looking for the squeeze to here. So all of our trades are now in the money, and now we have to start making some decisions about how we might manage those profits. I wouldn't necessarily be getting in here because of the fact that Amazon does it. It doesn't like to grind, so, I mean, it doesn't grind well. So it doesn't like give you really strong squeezes. It'll kind of squeeze up and then come back and then squeeze up and come back. And so you have to be ready to kind of ride that up and down wave. Biotech. So right now, biotech is starting to get a bid. Um, I'm not trading any biotech stocks right now, but I have been very, very surprised by the rotation into biotech. Now, a person that did a really great live with us, and is probably somebody we should have on really soon just because of this rotation, is intellectual beauty. She just is, yeah, she knows biotech really well, but biotech can be very, very cruel. You just need a little bit of bad news to come out and the stock can totally fall apart. So like there's been a big rotation into it and biotech is doing well, but it's similar to kind of healthcare where everybody's like, oh, good news comes out, you get a little bit of a bid, and then you kind of give it all back way too soon. And you're just like, oh, this is annoying. We do have a couple of healthcare stocks that we're in. Um, so that we like, but they're not biotechs. And we definitely have to do a joint live soon. And then, yes, I hope to be going to the summit. It's only that the summit this year is in September, and it's literally right when my kids start school. And since they're starting school in the Serbian language, I want to make sure that they, get started in school well. And so I kind of want to be here for their first weeks, and the tech summit is like right at the same time. So I'm having like a uh what is it? One of those like career mom debacles. So we'll see. We'll see how it goes. But we definitely have to do a joint live. Um so yeah, I mean, healthcare stocks still have potential. I think they continue to have upside gamma. And so we've been cautiously playing them to the upside. As long as they respect their gamma directionality and are hitting those pins, we can stay in. But they have been, you know, more, let's say, iffy on their performance overall. Um, So, I mean, I think that the main thing is that there's still an odd amount of uncertainty in the markets, more than anything, because everybody was expecting a lot of bad things to happen, and none of them did come to fruition. And the question that nobody can seem to answer for themselves to like put their mind at ease is, are like, have we put all of that to rest? And I think that it's like for things like, unemployment and inflation, there's still some aspects of the conversation that continue to be amorphous. So you have to be trading the market that you have, not the market that you want, and not the market that you think that you might have in 3 months. You really do have to be trading what is in front of you. And for those who traded with me in 2022 and 2023, um, like that 2022 high into that 2023 kind of um, drop. I made most of my money during that time trading zero DT setups, selling a lot of volatility, and then just, recycling my returns back into the market. Even on this low volatility, that has still continued to be from amongst my most profitable trading setups. It allows me each day to, to participate without feeling like, oh, I need to stay in this position for 6 months. Now, of course, a lot of our trades, because we set them up months ago when the market was literally bouncing off of like sewage level lows. I mean, this is like crazy. You have to just get long. There's no more down from here. I mean, maybe there's 7 levels of Hades, but eventually it's just too hot to stay there, right? So now we're back at highs. And so we do have to be careful. But one of the ways that we are careful is that we do a lot more time-based trades than we are doing like really long duration trades. So I got too much money on the sidelines, and I'm sick about this during this run up. Yeah, a lot of people are in the same situation. So, but the good thing is that there are ways to learn to like safely deploy strategies around your positions, so that even if, for instance, like, so right now, if I had to, I'm not buying any stocks like at these highs. But more so, I'm positioning myself to be able to take advantage if I get dips. And the main thing that I like, that I'm really liking, is short puts. I get paid as long as things are going where they're supposed to be. But if something like, you know, if something like ARM or Marvell or FTNT dropped 10% overnight on bad, crazy news, I want to be able to take advantage of that. And the thing is, the price movement is just so fast. You usually can't, unless you have like a limit order that's just sitting in the background on like hundreds of stocks all the time. I mean, that's just a lot to manage. But by doing short puts, you know where those positions are. You can see how they're performing, and if one or two of them get tapped, you have such an amazing entry price because of the short positioning. You are paid while you are waiting for the position to perform or not perform. But then you always have the ability to sell whatever shares you don't want in the next live trading day. So too many are sticking to their own conviction. Yeah. I think that you want to trade with conviction. It's true. Like, you want to know like what your bias is. I think that there's a difference in understanding why you are trading a stock and why you are in a position, and then being able to see when your thesis isn't working out. The problem is when people's conviction becomes like a religion. So they're like, a stock is moving against them, and they're like, no, this isn't what it was supposed to do. So now it has to do something else. um that's not conviction. That's not even reasonableness anymore. That's you're like trading outside your right mind. And then at that point, you might just want to close your positions because you're not making good choices under the stress. Um, so there's that kind of, sober judgment, and then just like hopium. That's those two things don't belong in the same kind of trading acumen. I think the other thing, I was listening to a trader the other day, and I'll tell you, I really, really, really like despised this person's comment. And it was a two traders. One was a mentor trader, I guess, and the other one was a newer trader. And the newer trader had been making a lot of money, taking really good positions, and then one trade went against her. And then for whatever reason, the advice she received is to like keep averaging down. So basically, she averaged down and then lost everything that she had because the positions never came back. And the person, the mentor, and I really do put it in air quotes because this just blew me away. The person was like, the minute that you saw that the stock was doing something different than what you thought, you should have closed your position and reversed it. You should never take a position and you have no idea why you are taking it. That is the worst trading advice. Maybe not the worst one piece of it. I mean, it is a bad advice. If you are looking at a stock, you did research either on the fundamentals or you have a process in which you trade. You're looking at the chart and the chart is telling you X. X didn't show up. It doesn't mean that negative X is now what is going on. Um, there are 1,000 reasons people don't get pregnant. And like just because your idea didn't work out doesn't mean something the total inverse. It could just mean something really minor that, like you missed something in the data. There was some strange news that came out. Something was happening in the company that you didn't necessarily notice or see or take advantage of. That's why you have a stop loss. The answer to taking bad positions is not reverse it. I was like, this is terrible. And people pay you for this kind of bad advice. So there you go. So I just had to say that because I heard it just recently and I felt like this is such bad advice. Why? Um, yeah, it must do this will be the fastest way to go to zero. Uh, it'll be the fastest way to go to negative. So it'll be your like first, second, ninth, 20th, what do you call it? Margin call. Um, so yeah. Let me see. Oh, okay. ARKG. Yeah, that's a good one. It gives you exposure to a diversity of biotech stocks. So yeah. Um, I'm not sure if you guys have any other stocks you want to talk about. It is top of the hour, so I want to respect your Sunday afternoon, your family time before markets open in the morning. But yeah, I think that you know the last weeks have been really, really, really successful for us. And I'm just because it's what's the trading phrase that they always say, like past performance isn't indicative of future performance. And the reality is that you can have 1,000 wins and then end up with 20 losses behind them. So I have to stay really humble. It's been a like exceedingly successful quarter, or like last 3 months I should say. And like our trades have just been super consistent, and we've been able to bank really great profits. But going into a week where you have this much volatility, this much economic news, you just have to be humble with the situation and really look at profits you've already made, make sure that you're hedging yourself, or that you have like a portfolio, um, what's it called? Um, a, like a portfolio margin hedge. So, maybe you don't have a hedge on every single one of your trades, but maybe you have like one decent hedge where if we have a 3 to 5% drawdown in the next couple of weeks, I'm at least going to minimize some of my some of my drawdown on my account. So then maybe I can reposition myself and things like that. But what's the word? But I don't also want to say, oh, because I've been successful in my bullishness and now all of a sudden I need to close up shop and then start being bearish. That also doesn't really make sense. Um, and yes, for those um, that are looking for to protect their trades, a time like now is a good time to start thinking about selling covered calls. And a great way to think about where you are selling your covered calls is look at the stock that you're trading. And let's say, for instance, a stock you really love, like let's say that you're trading ARM, and maybe you've been in ARM since it was like, 110 or whatever. And let's say that on earnings and, into the next week or so, it runs up to the 185. And you would actually, in real life, if the stock were to run to 185, you would sell your shares. Then you can sell a covered call at the 185, because if ARM doesn't get to the 185, you get paid for waiting. And if the stock is bullish, you continue to make money on your shares. And if the stock is a little bit bearish, you make money on the covered calls. And so you're not in as much of a loss. The thing that you don't want to do, or what you want to be careful about, is a lot of times people expect like a short term covered call, like a 1 week covered call, to give them a massive amount of returns. And so then what they end up doing is they end up selling the call really close to the current price. And so they end up very consistently having to ask themselves, do I want to sell my shares? Do I want to stay in? Do I want to roll it out? And then they're like over managing the covered call. But if you think about the fact that, okay, if this underlying were to get to X strike price, I would be happy to sell the shares. Then try to find that strike price and something like a 14 to 20 delta, so that you are at a very low area of likely to be tapped. Unless you are trying to get rid of your shares, then of course you can sell it at a higher delta. But if you're trying to use a covered call strategy as a consistent strategy, then using something like a 20 delta can help you. It'll avoid you getting too close to the current price, keep you honest about what credits look like at that kind of safe space in the conversation. But covered calls are a great strategy, especially when you start to think there's a potential that prices are going to be flat or start to roll over. All right. Well, I think we answered. Oh, did you discuss the EU tariff agreement? We talked about it, but very briefly. So the main thing is that it's likely going to be 15%. And the main issue is going to be if the market is ready to digest that. The market is already a little bit surprised by the fact that we had so many more tariffs that were above the 10%. But until now, the market hasn't digest that information because companies haven't started to talk enough about the fact, like talk enough about how the tariffs are impacting them. There's a lot of speculation about how it could be or how it may be, but in fact, because we're still only now finding out what the tariffs will be, there's still a lot of ambiguity. The other thing is that there are a lot of loopholes to the tariffs, and that's like so one of the things is that a lot of companies that, they never signed up to that like North America something something agreement, to be a company under that umbrella agreement. And so because of the fact that it wasn't worth it, they wouldn't have saved any money on tariffs. But now that, tariffs are looking bizarre for Canada and are overall higher than they were, a lot of companies can benefit from being part of that North America, um, what is the agreement, the trade agreement between Mexico, Canada, and the US. But that agreement has some loopholes for tax benefits if part of your supply chain falls under that agreement. So then you don't pay those much higher taxes. So there's that. We don't know how the loopholes will impact, and we don't know how like loopholes based on, oh, you are in a particular area that is considered, you know, that falls under a lower tax threshold, how much that will impact. So again, there's a lot of loopholes to like what's going to happen with the tariffs. The other thing is that Trump seems to really be committed to this sovereign wealth fund thing idea that he has in his mind. And so part of what he's trying to do now is kind of get everybody forced into this higher tariff class of 15% after kind of making everybody think that 10% was the tax thing we were all doing, and or the tariff thing we were all doing. And part of the reason is because he's using it to pressure countries like Japan, and other countries to then redirect, um, direct cash into something like a sovereign wealth fund. So that seems to be maybe what's like boiling under the surface, that he wants to get the EU and Japan and other countries to basically, if you're not going to buy treasury bills, then you need to do this other thing that is like treasury bills. So, but not treasury bills, because then it doesn't isn't going to be managed by Besant and the treasury. It'll be then managed by another cabinet that Trump sets up. I'm not sure. Nobody really knows what it like actually is going to look like, but that seems to be something that is now bubbling under the surface, and he seems to be focused on that. So we will see. Thank you for the vote of confidence, Dre. Yes, I hope you guys listen to the trade ideas, because um, they very often turn out to be exceedingly profitable. So I know what my accounts look like. So I'm like, when I get up there and I tell people, I hope they're listening. I mean, I'm looking at my monies, and even though I'm not a financial advisor by any stretch of the imagination, this is only for educational purposes. Um, I'm only telling you guys what I'm doing. So, I'm just saying, you don't want to sleep on the information. But all right, friends, I hope you guys have a great Sunday, and I won't take up more of your time. But we always chop these up into reels. So I do hope that you'll go back and watch them as we post them, because, yeah, they're good information to revisit, and it's a good kind of accountability check. You can see if the things that we talked about actually did transpire. So I do hope that you guys have a great trading week. And as always, if you want to learn how to do these trades, you know you might want to consider joining the Discord. I won't lie, I'm not the cheapest Discord in the universe, and so like that's just how it is. And in part, it's because we do a lot of education, but we also do a lot of trading. So it's not just education without trade setups. And I'm giving you the charts, I'm telling you what I'm looking at, I'm giving you really all the information that I'm working with, and I'm telling you how I'm managing my trades. So, that's kind of why. The other thing, though, is that when you join the Discord, I do always ask people, you have to give it 3 months. You have to give yourself first time to go through, watch the videos, and learn, because we are not just buying calls and buying puts. I'm not against that, but I do know that there are thousands of resources out there doing that. You know, anybody can ride in a speedboat. I'm literally teaching you how to ride the English channel in a kayak and how to do it safely. So, if that's interesting to you, join. I do think that it is. The reality is that if you learn how to even just trade iron butterflies, that would be that would pay you more than that would make you more than $250 a day. So you should literally be able to pay back the Discord fee every single day of the week because our hit rate on our daily iron butterflies is like 95 plus percent. And we do two iron butterflies a day, so you can hit your $250 a day twice if you want. But of course, you have to be above the PDT rules. So if you don't have $25,000 in a margin account, then you can only trade 3 times a week the zero DTs, but then you can trade all the other stuff. So, is your daily system? Yes. So we actually have our Discord divided into well, three key sections, really. One is our discretionary trades. So those are trades that we're setting up because of earnings or, something like that. And then we have another section, which are our systematic trades. So those are trades where like if you couldn't get into the Discord for yourself, you could actually do the trade totally on your own. So we have a number of trades. We have a long butterfly trade, two iron butterfly trades, a range of short put trades, and then um, a put credit spread trade, and also a weekly calendar and diagonal trade. So overall, you have like a range of trades. And for people that they don't like discretionary trades because every week you're like kind of doing something different and you have to remember all the reasons why you did each trade and all that kind of stuff. They don't have to trade like that. You can just do the really systematic trades. But the win rate on our systematic trades is gangbusters. So uh, there's honestly no reason to trade the discretionary trades if that's not your personality. Now, some people like to keep their lives exciting and they want to, try other things and taste all the flavors of the universe. Well, then paint with all the colors of the wind. We have our Pocahontas trades, but we also have the like bog standard by the rules, stick to it trades that we do week in and week out. And the people that are doing those trades consistently are making quite a bit of money. They do not seem to be disappointed. Some people don't share their wins all the time. And I'm like, you tell the people, tell the masses. But no, I understand. People like to preserve their privacy. But yeah, all of those trades you can learn in the Discord. If you want to find the Discord, you can see our link in bio and it has the link to the Discord. We would love to have you. We are, the Discord is constantly growing and people are like learning to take the trades with us. But as always, it's not just long calls and long puts. So you do have to come into the Discord and be ready to learn how to do some extra stuff. Like this is bachata, people come. You'll learn. I'm a good teacher. I'll help you. You'll have fun, but you do have to learn. You have to get ready to do the grind in the beginning. All right, friends. I hope you guys have a great week and I hope you have an extremely successful trading week and that some of this information was helpful for you to increase your profitability over time. All right. I'll say goodbye for now.